The housing market crashing is a really scary thought, and it's possible the housing market could crash in the near future. There are warning signs that the housing market will crash. In this video, I'll go over 6 of those warning signs and what you should do if you're a first-time homebuyer thinking of buying a home when a housing crash could happen. The first sign is risky mortgages. After the 2008 housing crash, most people believe that a major reason for the housing market crash was because of subprime mortgages that were being awarded to people. Basically, what this means is these mortgage products weren't that great, and some people who were awarded a loan probably shouldn't have gotten that loan to begin with. Nowadays, the mortgage business has changed quite a bit, and it's gotten more difficult for people to buy and get a loan compared to 2008 and before, which can be a good thing. There's a reintroduction of some mortgage products that we had back then. We're now seeing one of those, which is an adjustable mortgage. An adjustable mortgage is basically an introductory rate on your mortgage. So right now, interest rates are at about 7% as of this recording. Let's say you get an adjustable mortgage for 6%. Then what happens is after a certain amount of time, your interest rate will go up, and it'll go up every year, or it could be 6 months. It depends on what your agreement is with the lender. The reason this is risky is you're not locked into a monthly payment. There's stability with owning a home. You know what your payment is going to be for the rest of your life, essentially. There are some variables there like property taxes, home insurance rising, things like that. Other than that, your monthly mortgage payment is predetermined. It's fixed. So with an adjustable mortgage, there's a concern that the rate could adjust to an amount that you can't afford. Another sign to look out for is a lot of loans being originated that require mortgage insurance. Typically, if you get a mortgage and your down payment is less than 20%, you have to pay mortgage insurance. The insurance basically protects the lender if you were to default on the loan. Currently, the average down payment people are putting down is about 15%. So that means that there are probably a good amount of mortgages out there that require mortgage insurance. I could also see a rise in mortgage insurance because of the kinds of loans that are being offered, like 0% down or low percentage down loans like 3% down, things like that. And because of that, of course, these buyers will most likely have mortgage insurance. So we were probably going to see more loans that have mortgage insurance, which in itself isn't bad, but I think the theory behind it is there are people who have lower equity in the home, so if something were to happen, they wouldn't necessarily be able to borrow against themselves. So if there's a life event that happens and they need to get money, they wouldn't be able to pull out money from their home because they probably wouldn't have a lot of equity in the home since they bought it with a lower down payment. Home prices plateauing is another sign, which we're starting to see in some areas. Real estate is hyper-local. So in some markets, we're seeing home prices where they're still rising and still a very competitive market. And in some markets where it's going down and home prices are dropping, and some places they're dropping kind of a significant amount. And then other places are kind of plateaued. They're not really rising, not really lowering. And that could signal there is a housing market crash coming because if you're not gaining traction, you're losing traction, right? Interest rates continuing to rise is also a sign of a housing market crash. And boy, have we seen that. Interest rates have gone up about 5% in the last 2 years, which is really unheard of. But this is a way for the Federal Reserve to fight inflation. So with interest rates going up, that obviously has a direct effect on affordability, specifically how much someone is able to afford. At some point, this could affect demand, where maybe not as many people want to buy anymore, and then it could make it more difficult for sellers to sell. If sellers can't sell and they really need to sell, that's when we get concerned about foreclosures and people having to sell their home under market value and things like that. Right now, the demand is still pretty high in a lot of housing markets, so we're not seeing the interest rates affect demand as much as we thought it might. It's definitely affected the housing market, but just not this huge effect that I think the Federal Reserve originally thought. But only time will tell. It's possible that interest rates could keep on rising, and if that does happen, at some point, things are going to have to break because I can't imagine people being able to sustain higher interest rates, higher home prices. It just doesn't make sense. Another sign is housing inventory going up, which we haven't really seen that much of in all markets. In some real estate markets, it's still very competitive and there is low inventory. If we see an increase in inventory, that could mean that people aren't ready to buy now. And again, it goes back to sellers being in a bad spot, maybe having to foreclose and things like that. And then that gets into another sign, which is foreclosures going up. This is a little tricky because if you start to look at real estate data charts to see about foreclosures, you'll see that foreclosures have gone up and have gone up significantly within the past year. But of course, that has to do with the foreclosure moratoriums and how lenders were able to foreclose on buyers once the moratorium was lifted. Then we started to see foreclosures. And of course, that makes the foreclosure percentage go up. Generally speaking, our foreclosure rate is historically on the lower side, but with the economy being as unpredictable as it is, you really never know what might happen and if people might need to foreclose on their property. Now, what do you do as a potential home buyer if you see a lot of these signs of a housing market crash? You have to figure out for yourself if it makes sense for you to buy a home right now. Ultimately, buying a home is a personal decision with many variables. Something I would really focus on as a home buyer is my financial stability. What do your finances look like? Are you able to afford a home? I have a home affordability calculator that you can use for free. The link is in the description. Then I would think about my life stability. So where am I currently in my life? And do I see any changes on the horizon? For example, if you're thinking about starting a family in the next couple of years, but the home that you're able to afford right now is a 1-bedroom condo, buying that 1-bedroom condo now may not make sense because if there is a housing market crash, you may not be able to buy another home and you could be stuck with this 1-bedroom condo when you're trying to start a family. Also, maybe you're thinking about moving out of state in the next few years, things like that. In my opinion, it probably isn't the best time for you to buy. I'm recommending most people make a 10-year commitment if they're going to buy a home right now. The reason being is with the unpredictability of the housing market, there's a potential for a crash or maybe home prices go down significantly. Basically, what all this comes down to is you not having a lot of equity in the home and not being able to be in a financial spot where it makes sense for you to sell the home. My thought is if you wait for 10 years, the housing market is going to do what the housing market is going to do. And hopefully after those 10 years, you'll be in a more stable spot where now you'll have gained equity in the home and it makes more financial sense for you to sell. Now, I understand that life is unpredictable and you never know what might happen, and 10 years is a big commitment. So if you are kind of concerned about making a long-term commitment to a home, maybe you shouldn't buy a home right now. Will home prices decrease in 2024? Check out this video to find out, or this video about why you shouldn't buy a home right now. Thanks for watching to the end, especially if you're a subscriber.